Hey guys, from B2 Broker office, I'm Arthur, CEO of B2 Broker Group of Companies. John is head of dealing division of B2 Broker Group of Companies. So John, let's speak about pre-execution and post-execution. What can you say here in terms of MT4, MT5 type of executions, 1-0 prime exam? What is the difference between pre-execution, post-execution? And what is the advantages and disadvantages of pre-execution and post-execution models?
Okay, so commonly asked question among all of our customers. Pre-execution in essence is a trade originates from, example, end user, goes through our infrastructure and it hits market. It gets a confirmed price from the LP and the order was filled and we confirm that price on the terminal. So the client will see that as a final confirmation. Now, pre-execution is more or less the CFD business models. Most of the broker dealers today are running on pre-execution basis. Now, bear in mind that many years ago, and I am in this industry for several years, we used to have post-execution as well in the CFD space. Now, it's no longer a common practice. Why? Because when you post-execute, think of it this way. You have an end user, you have a trader who sends a request. You will confirm that price if your sources of data are matching. Typically, there's some small deviation in most of these algorithms. However, if you see that this is aligned, you confirm the price to your end trader and that trade then sits on your books. Then, only then, it goes to the market. Now, a lot of people say, I place the odds. Why would you want to take that kind of risk? One day the market slips or there's a strong fluctuation. Imagine during news. You will confirm a price to the client. You will then send the order to market. You don't know how you will get filled. On a pre-execution basis, you give them real market conditions. So that's basically the CFD world. In the traditional norm today, I would call it, is pre-execution.
Pre-execution.
You minimize that risk, you get rid of it, it goes to entities or business models like ours, and it's off your balance sheet, which is ultimately what you need to achieve. Now, post-execution, it's something that exists for many, many years. Let's talk about the spot business. We run crypto spot. Perhaps, let's think of it from that perspective. In the crypto world, because it's a spot, we have matching engines. So we have buyers and sellers in our ecosystem, one buys another. Like in the futures market, you have market participants, they one another buy and sell from each other. Of course, the trade is clearing through clearing partner. The spot market, we are that clearing partner. We are the exchange. Example, we have a business, as you know, B2BX, one of our legal entities. Here, we have a matching engine. When your end user is trading here, it's purely a matching engine. Buyers and sellers are meeting and then orders will be filled. Now, when you're dealing with post-execution, the odds are 50-50. You never know what will take place. Again, it may play in your favor at times, but most of the times, and unfortunately, this is where brokers will find the truth. Most of the time, the market will move against you. So yes, in some cases, the odds are 50-50, but in real terms, it's more like 70-30. 70% of the time, you're gonna lose money on those trades. And that's what we see. Crypto is a fast-moving market. You cannot be on post-execution. Or if you are, you need to be very much well-capitalized to sustain possible losses. Possible.
I see. And in terms of Forex CFD, crypto CFD, basically what you are saying that if we start using, let's say, I don't know, if broker starts using post-execution model, then he might end up with the huge loss, right? Because he will be confirming to his end users, traders, let's say, execution by indicative prices, right? And his execution, when he will be doing, he will be offsetting these positions to liquidity providers. These positions, they might be executed by completely different prices.
Absolutely, and that's, as I said, this is an old practice to be on a post-execution basis. Over the last few years, no one applies that anymore. But in essence, that's what you stated, that's what it is. You offset afterwards. That's very risky in fast-moving markets like ours.
I see. But if we are talking about MT4, MT5, Prime XM, 1.0, all these already well-established and sophisticated platforms, so we are safe, right? As brokers, I'm saying from the position of the broker. So if I already bought this platform, I could easily set this pre-execution model, right?
Absolutely, and we help you do that. We have the knowledge, we do the setups day to day. Multiple customers almost every day. We have new setups in place. We guide you how to do this.
I see.
The key is to mitigate that risk.
I see. Okay, in terms of crypto safety, Forex, like OTC market, it's clear. So you can help me here to protect my business by setting up a pre-execution model. What's about my spot business? If I bought already B2 Trader platform from you, because B2 Trader, as far as I understand, it's pure matching engine system. And as we all know, matching engine means that it's execution venue, first of all. And originally, it was designed to have market maker on one side and members or participants of this particular venue from another side, on another side, which means market makers, they place limit orders and create or fill order book. That's how they create liquidity itself. From another side, there are players or market participants or members of this particular trading venue who is going to trade, we can say this literally, against market makers, right?
Definitely.
So market makers, they take a risk. Do they hedge or offset this risk or not on another venue or with another liquidity provider? That's another story. We don't know how they do work. But here, if we are talking about B2 Trader, so let's say I bought this B2 Trader, how I supposed to make a hedging? Because as far as I understood, that's what you thought, I cannot make a pre-execution on my spot business, right? So what do you suggest, John, me here? What shall I do?
So bearing in mind that the spot business, it runs on a matching engine basis. Most of our customers, for example, today, they have, or not all of them have the ability to choose how to offset that risk. Example, one of the choices that customers tend to select is to hire market makers. We have a network of very professional firms that dedicate and they're specialized on this particular field.
But they're pretty expensive, I guess.
Well, that is the tricky part. It comes at a cost, and a very large one, because typically they bill you per currency, per crypto pair.
Per trading pair, yeah.
So imagine you may end up with an invoice very significant at the end of each month.
And some of them, as far as I know, they don't take a risk. They don't inject collateral from their side. So they might ask you to give them your own funds in order to be able to trade against your users.
And this is something that many people are not comfortable with because they're running risk yet you're placing collateral with them. It's the way this industry works.
And if they made money, they will ask to withdraw their part. So
correct.
Despite the fact that how much is there. But what if they lost money? What's gonna happen then? And how you gonna ask them to compensate your loss?
This is a very tricky element of the industry. One that you must know who you have as a counterparty. That's where I always believe a firm must carry due diligence. Understand who that partner is. Understand if that's your business partner or not. Very sensitive, very delicate aspect of that relationship.
And you see here's like two key points that you have to wait very carefully before you're gonna make a decision. Like on the one hand, on the one side, there are plenty of choices of market makers, but they don't have really balance sheet. What they are doing, they're like they develop their trading bot.
Yes.
They try to copy different order books of Binance, Kraken, whatever exchange, and they try to price in your exchange. And basically they are running pure risk against your users. And when they may end up with the losing money, potentially they may disappear also.
I heard some stories on this topic, and that's why I say the best thing you can do is you must do your own diligence. No one will tell you, and have good references, by the way, about these potential relationships. It's very complex, I must admit.
I see.
The other choice that you may have, for example, you may utilize our Marksman Hub, which can connect you to external liquidity, even our own exchange. You can take liquidity from us.
Really?
Yes.
So it's basically like ready-made solution to connect my exchange to other exchanges.
Absolutely. We built this over the years, and it's a very sophisticated piece of technology designed for this particular segment of the industry.
See. So because I suspect that you couldn't find such solution on Forex crypto CFD market, so that's why you had to build your own.
It was very difficult years ago when we were aggregating liquidity many years ago. We encountered this level of, I consider, lack of technology. And we're innovators in this business. We've been heavily involved in crypto, and we learned the technique on how, I call this the know-how, how to do things that will benefit our clients in the long term.
I see.
We see some of our largest customers at the moment, they have a very large client base. Some or most of the times, their own clientele in their own ecosystem creates that organic liquidity. So at the end, the amount of trades that need to be going to an external LP, it's minimum.
I see.
This is the advantage of having large client bases.
I see. Yeah, actually the same approach as we discussed about leverage. And when you have then more clients you have,
correct,
then bigger leverage to small clients you can provide to small traders, let's say the traders with the small amounts. Here, the same stuff. Then more clients you have, then potentially internal matching will be like using more and more, like pretty often.
And we see that on a daily basis. We see how some of these clients, they randomly send trades on major crypto pairs or, heavily traded cryptos.
I see. Okay, very good, very good. So now it's clear. Thank you, John. Now we understand what does it mean pre-execution model on the Forex and CFD business, let's say, and post-execution, what is the advantage and disadvantage on the crypto spot markets. And thank you. See you soon.
Thank you.